Hey guys, welcome back to the channel. So today we will talk about a company called Trubar Inc. The ticker symbol is TRBR. The company is listed on the Venture Exchange in Toronto, in Canada. I believe the stock has the potential to 5x over the next 5 years. There's some hidden relationships between the company and the research firm, the Clarus Securities, that covers the company, that kind of provides us some visibility into what the management is thinking, which we will talk about in this video. And yeah, so let's get into it. So basically, Trubar only sells these protein bars now. They're getting into more products as well, which we will talk about in the course of this video. So Trubar sells these protein bars. Protein bar trends have been really strong as well. These protein bars have 12 grams of protein and they're plant-based, and there's not many good tasting plant-based protein bars available. So that's one of the reasons why they've been doing really well. They sell through DTC as well as through Costco, and those are the biggest channels for them. So if you go through the presentation, earnings presentation here real quick, you'll see the revenue has surged 77%, and it's further supposed to go up to $65 million in 2025, which is about 50% growth. The company has a market cap of only $80 million, and it's trading at potentially less than 1 times 2026 sales. And we'll talk about that catalyst as well, how the management has told that they want to sell the company, and that is the reason why I like the company so much, because there's a catalyst that will unlock value in a very short period of time. So that's one of the reasons why I love this company so much. So the cash balance right now is 4.7 million. They have about $5 million of debt as well. So that's there, but they've paid out a significant portion of their debt already. So as I was telling you before, the Simply Better Brands was initially the name of the company. They have now transitioned into Trubar. They've sold all the not profitable assets, and they've just basically cut the fat, and now it's just a lean company led by Erica, who has done an amazing job with this brand, and they continue to execute really well. So this is the revenue trajectory for Trubar. So in 2021, the revenue was less than like $1.5 million. In FY24, it has reached 43.6 million, and in FY 2025, it's supposed to get to about 65 million plus. So next quarter, from what the management has told us, could potentially be the best quarter they've ever had, and there's a chance that this company could do really well like going forward in the next quarter. Because what happened was, in the first quarter, they were supposed to have a promotion that they were running with Costco that the management had initially communicated that will go through in Q1, but it didn't happen in Q1 and actually went through in Q2, and that's what the management told us. And that due to that, they'll have a huge chunk of revenue coming into Q2 and going forward. And they've also expanded their retail presence in places like Target, as well as Kroger. They're expanding into Walmart as well. So there's a lot of expansion. Sales points are increasing, so that will also help them reach a lot of sales in the future. So in 2023, they were in 4,500 stores. By 2025, they want to get to 25,000 stores. So that's been the primary reason why the revenue has gone up quite substantially. So this is the Amazon growth, the DTC sales. They've been growing like at a very amazing pace. They've achieved 13.1 million in revenue run rate for the 14 months since the launch on Amazon, and they want to get to 20 million by the end of this year. So that's something that could potentially play out. So I was telling you about so I guess the other thing that I should tell you about is the board of directors. So the board, like Richard Kelman, is someone on the board, and he used to work at Mars, and he was responsible for a lot of sales of similar companies to Mars in the future, in the past. So the management has experience of selling these protein bar companies to larger CPG companies. So this is what they plan to do. And even in their earnings presentation since day one, they've kind of mentioned what kind of multiple they would like to sell, or like what kind of multiple generally brands like Trubar sell to like larger CPG companies. So you'll see like generally it's about 3 times revenue. Like the average is 4 times revenue, but if we say like the profitability of the company of Trubar is not that great, so let's say even 3 times revenue. Right now the revenue is 65 million. Next year is supposed to be around 80 million. So you're looking at $240 million, right, for potentially for an exit multiple, and the market cap right now is 80 million. So that's a 3x right there. And then they're launching new products, which we'll talk about as well, which could be another option on the stock where the revenue could go up to potentially 100 million. And at that point, if they're profitable, like they could get the average multiple, which will be 4x, which gets you to like a $400 million market cap, meaning 5x from here. So that's the 5x scenario that I was talking to you about before. So the relationship that I was talking to you about, which is kind of interesting here, is so Clarus Securities is the only analyst on the stock, And Claris Securities chairman is also the chairman for TRUBAR. So there's like the same person heading the analyst firm as well as the company as well. So you can say, hey, well, why wouldn't they be just promoting their own stock? Like why wouldn't they be lying? Well, like if you follow the last 3-4 years of reporting, they've been very close, so they don't really miss too much. So that's something that I think like they have earned the credibility of the market, and this stock has done really well over the last few years. Like recently it's been more stagnated, and Q1 a lot of people have kind of sold the stock because as I told you, due to this promotional timing that they had, this promotion, the timing that they had with Costco, that just kind of messed them up. They were supposed to show that revenue in Q1. It didn't come in Q1. It's going to come in Q2. So then in Q2 they'll have the best quarter ever. They'll probably do like $18 to $20 million in sales in Q2, and probably like maintain that run rate at least for this year. And that should lead to like potential re-rate of the stock, because a lot of people think that this company is fluffing it up too much, or like it's not for real, like the things that they're saying. So there's a potential that Q2 comes in really good, and then you see the stock going up because people are like, oh well, like we didn't really anticipate the stock. I covered the stock a couple of months ago. It's been down since, like, I think it's down like around 7 or 8% since I initially covered it like a couple of months ago on my Substack. But I think there's a chance that we turn around, and there's a decent possibility that we see a multiple expansion, and as well as the stock going up in when the next quarter's earnings come out. So that's something I'm keeping my eye on. So as you can see, the DTC revenue rose almost 7x in Q1 2025. Like that's remarkable, right? Rapid expansion of sales through the Amazon sites in US and Canada, as well as through TRBR.com. CEO Erica Grossman noted on the earnings call that their goal is to grow DTC revenue up to $20 million by the year end. So this will be huge. Just the DTC revenue portion, right? If you put a 3x multiple on that, that's 60 million potentially, and the market cap is only 80 million right now. So that's something else to look at. These are some of the projections that this was their estimate for Q1 versus what it came in actually, and you'll see that the difference is not that big, right? It's quite close. So that kind of tells us that they have a decent visibility into what the company is doing. And the analyst who wrote this report, the Noel Atkinson, actually he's the one who gets a lot of priority on the earnings calls as well, and he's probably the first one who asks a bunch of questions and things like that. So they kind of know like what they're talking about and everything else, because they have a direct line to the management, right? So that's the other thing. And so this was a bunch of new distribution points that they've gotten. In this regard, our channel checks reveal that multiple TRUBAR flavors are now available in stores across Harris Teeter chain owned by Kroger. Harris Teeter is one of the oldest and largest grocery chains in Carolinas and operates 260 stores over Washington. And then they talked about Target. One of the most substantial launches this year were TRUBAR has been Target, where approximately 1,100 of the retailers across 2,000 stores were stocked in early quarter 2 2025. So this is going to be in the upcoming quarter, right? So that's another potential tailwind for them. And then we have been tracking in-store TRUBAR inventory date for more than 900 Targets and Walmart stores across more than 40 major metro areas. Our tracker portfolio covers about 50% of all Targets and Walmarts that have been stocked to date for almost exactly the same retail price. So there's no selling. There's no discounting in as well. If you watched my Celsius Alani video, I talked about that as well, like how discounting impacts the revenue so much, right? Gross revenue versus net revenue. So that looks like that sell-through is really strong, and that kind of should translate into higher revenue as well. And then they talked about how TRUBAR was rolled into 700 locations first in Walmart. They've gotten 100 more locations. Total Walmart locations are 4,600. So there's significant headway, significant room for them for getting those more distribution channels and everything else. So the other thing that they talked about was the sell-through in Target stores. So 520 Target stores were tracked across the US. 33% sold out on this specific flavor, cookie dough flavor, within 3 weeks. Further 33% sold out in the following week, and another 28% of the stores have sold out since. So 94% of these tracked stores, accounting for over 1,100 Target stores initially stocked, sold out in roughly 6 weeks. We expect reorders to get in the stores shortly, right? So if Target is seeing such a nice sell-through, they're obviously going to increase the shelf space, and that should help them going forward as well. So that's nice to see. And the new product that I was talking to you about, and I think that's also something that's a huge opportunity for them, and that could add multiples on the stock, is the Kids bar are slated to launch in specialty retails first, and then minis are planned to launch first in food service and corporate office channels. We see these new sizes as a positive way to drive more shelf space. So if you know about the Cliff bar actually 50% of their revenue comes from these smaller bars, smaller size bars. So they're trying like different variety of packaging and different type of products and everything else, and that should hopefully help them as well. So that's going to be something that I think it's probably too early to say how it's going to play out. But if this product also gets decent traction, the revenue right now for the normal, like barring this specific product, is about 80 million for FY26. Like let's say in FY26 this business adds another incremental 20%. You can add like potentially $20 million more, so you get a $96 million market cap. Again, put a 4-time multiple on that, you get to like $400 million market cap, currently trading at $800 million. So again, like there is potential for this company to 5x. The analyst here, so Claris themselves, again, like the relationship that they have with the management is very close, right? Because the analyst firm is technically owned by the chairman of TRUBAR. So our valuation model is 100% driven by TRUBAR's protein product revenues. Due to the passage of time, we have rolled forward our target valuation year to 2026 estimate. Excuse me. Our target multiple remains 2.25 times EV times revenue now applied to our 2026 estimate. Our multiple is modestly below the current 2.4 EV 2026 revenue multiple. So they're just like comparing a bunch of different acquisitions that have happened in the industry, and they're saying right now that the stock at conservatively should be at $2.25 per share if they were taken out. So the way they're growing, like the earnings profile is good. They have potential for growing this other segment of like smaller bars and everything else, and the execution from Erica as well as the management itself has been really good. They also have synergies when it comes to selling this type of product. The board of directors have experience of selling the Mars bar and like other RX bar and everything else. So there is an experience there as well, and they have connections in these CPG companies. For them, like $200-300 million is nothing. And if you follow me on X, I'll leave the link in the description. I've talked about this, how CPG companies who are traditionally more sugar oriented products are going to transition into better for you products as well, because I mean there's no other way for them to survive right now. If you look at like Tootsie Roll or like all of these other companies which sell like Pepsi even, right? You've seen what has happened to the Pepsi stock. So the stocks that are in these high sugar industries, like not good for you products, have been taking a beating because of the fact that the consumers are not becoming a little more inclined towards better for you products, as well as obviously GLP-1s, which have also played a huge role in people not being able to just eat sugary stuff because they need more protein and everything. And that's the reason why like products like or companies like Bell Ring Brands or your Fit Life brands have done really well, and that's the reason why TRUBAR is also doing really well, because there's a decent amount of protein. You also have good calories. It's plant based as well as just tasty as well. So that has helped them out quite a bit, and this makes this company very a very nice acquisition target for these larger CPG companies for whom $200-300 million is not that much. So yeah, that's the buyout potential for this company. They have been building the company in a way to sell it out eventually. So some people don't really like that too much, which I can see why. But I do like the fact that it's like trading at potentially 1 times revenue. The company has, or like the shareholder base has lost some faith in the management after the Q1 results, and that happens. It's very common in small cap land, where one quarter will be like just given so much credit, and the stock just completely like goes bonkers, and then one quarter where like there's a little bit of a hiccup, the stock comes back significantly. We talked about this in our DBO video where we said the Q1 revenue is not going to be great. The management is the market participants might take it as a huge negative, and the stock might sell off, and that's what happened, right? So this is what happened with TRUBAR in the first quarter. So the second quarter, if they're able to reverse that, if the management was correct about it, that Q2 is going to reverse the Q1 trend and it's just a timing issue, and Q2 comes in strong, then we'll see that turn around, and the stock could be potentially up like 25%, 30% in a very short period of time. And then if they keep on executing, they might get more credit for this. So that's my analysis of TRUBAR. If you have any questions, leave them in the comment. I do want to cover more speculative type of trades as well. It's just that I don't know if I should, because I mean, like, I don't want someone to lose money, I guess, if they do listen to my advice. So do let me know if you want me to cover speculative positions. It's just for the sake of it. If you want to talk, if you want me to talk about it, please let me know in the comments, and I will talk about it. I will make sure that I point out that these are highly speculative ideas, so that everybody knows and they don't make a decision where they go too high on risk and end up losing everything, because we don't want to be in that situation, right? It's just like playing baseball or cricket or something, where it's like a test match. It's like a long form of of a game where you can miss a couple of pitches. It's fine, but like when you swing at something that you think you can hit, right? So that's something we have to look at, like the risk reward of things, position sizing, and everything else around that. So we'll talk about that. If you want me to cover those, please let me know in the comments, and I will cover it. I've been a little hesitant for doing that, because I mean, I don't know what kind of person is watching the video, how they're going to perceive it, what their risk management strategies and everything else is. So that's the only reason why I've been hesitant on covering some some risky positions. Sorry, I've been blabbering a lot. So I'll see you in the next one. Take care. Bye.